All right, let's talk about a simple insurance mistake that can have absolutely devastating consequences for your business. It's a hidden trap that so many professionals fall into without even knowing it, and we're going to show you exactly how to avoid it.
We've all seen it, right? That tempting offer for a cheaper premium from a new insurer. But what if that simple move to save a few bucks actually created a massive, uninsured hole covering years of your hard work?
So, we're calling this the hidden insurance trap. And there's a good reason for that. It's because it catches even the most careful professionals completely off guard. The whole problem really stems from a basic misunderstanding of how this type of professional insurance actually works.
You probably think, hey, I've paid my premiums every year. I've never let my coverage lapse, even when I switched companies for a better deal. I'm safe. That should mean every bit of work you've ever done is protected, right? Well, unfortunately, that could be a dangerously false sense of security. The key to understanding this whole trap and avoiding it comes down to a single line on your policy. It's called the retroactive date. And it's probably one of the most important and most overlooked details in your entire contract. So, what is this date exactly? Well, think of it like the official starting line for your coverage. It basically tells the insurance company, don't look at anything that happened before this point. It sets the earliest possible moment in time that your policy will cover you for.
Let's make that even simpler. If you did the work before the retroactive date on your policy, you are not covered for any claim related to that work. Period. End of story. It doesn't matter that your policy is active now. The date the work was done is the only thing that counts. Okay, let's walk through a super clear example. Imagine your new policy starts on January 1st, 2024, and that's also your retroactive date. Now, fast forward to June. A client files a claim about a project you finished just a month before your policy started, back in December 2023. Even though you have a perfectly active policy when they file the claim, it gets denied. Why? Because the work was done before your retroactive date. And this brings us right to the heart of the problem, the anatomy of a coverage gap. This is exactly how that simple decision to change your insurance provider can accidentally wipe out years of protection. The trap is officially set the moment you switch insurance companies. See, what happens far too often is that a new policy will just default its retroactive date to the new policy's start date, not the original start date of your very first policy. And that simple default setting can be an absolute disaster.
This timeline shows you exactly how it happens. So let's say your first policy started way back on January 1st, 2020. You work hard for 4 years, totally covered. Then, on January 1st, 2024, you switch to save some money. And the new insurer sets you retroactive date to that same day. And just like that, every single project you did between 2020 and the end of 2023 is suddenly completely uninsured. So let's really break this down. If a claim comes in tomorrow for work you did back in 2022, who's going to pay? Well, your old policy won't. It's expired. And your new policy? It's going to say, sorry, that work happened before our retroactive date of 2024. So you're left completely exposed. And this is the point that you really have to remember. For these kinds of policies, the timing of the work is everything. It's not enough to just have a policy when the claim is made. You have to have had a continuous, unbroken chain of coverage that goes all the way back to when the work was actually done. Okay, I know that all sounds pretty scary. But the good news, the really good news, is that this is an entirely preventable problem. So let's talk about the solution and how you can make sure your past is secure. So the question is, how do you stop this from happening to you? Well, thankfully, the answer is pretty simple. It just takes a little bit of diligence on your part right when you're making that switch. Here are the 3 steps you have to take. First, you need to find the start date of your very first professional indemnity policy, the date you originally got covered. Second, when you get a quote from a new insurer, you must insist they match that original date. This is called maintaining prior acts coverage. And finally, when you get the new policy documents, don't just file them away. You have to open them up, find that date, and confirm with your own eyes that it is correct. Now, in a perfect world, your insurance broker would just handle all of this for you automatically. And you know what? Most of the good ones do. But the key piece of advice here is to always check for yourself. Mistakes happen. And at the end of the day, the consequences are going to fall on you. So the real takeaway here is about ownership. Your professional reputation is built on your entire history of work, right? It's your responsibility to make sure your insurance protects that whole history, not just the work you happen to be doing today. And that leaves us with one final question.
You spend so much time and energy planning for the future of your business. But after hearing this, can you say with 100% certainty that its past is just as secure? If you have any doubt at all, it's time to go find those policy documents.